Bitcoin has to chip away at a market cap. It has chosen gold almost as that low-hanging fruit of, hey, this is an easy one to pick on. It needs to take away some of that market cap from gold to be sustainable.
I don't think that the economy or investors care much about what the crypto community thinks they have to do. I don't have the appropriate numbers for crypto, but let's look at precious metals market share. In the United States, precious metals and precious metals related investments comprise about 0.5% of total savings and investment assets in the country. That's down from a 3-decade mean of 1.5% to 2%. And crypto's even smaller than that. We flatter ourselves in these business by thinking that we're an afterthought. My discussion with regards to gold is that gold doesn't have to win the war against crypto, which on a global scale is an irrelevancy. And it doesn't have to even win the war against the US dollar. It has to lose the war less badly. If ownership of precious metals and precious metals related assets in the US market returned to its 3-decade mean, demand would triple. There is lots of room for precious metals and lots of room for cryptos. I personally believe that they serve very different functions. They are competing right now for a market that's highly visible, that you and I both deal with and are part of. But the competition between them is irrelevant on even a national scale, but much less an international scale.
Really well said, Rick. But just another point I want to bring up, you mentioned the tech sector before, technology stocks, and there is also an opinion that should we see a taper and markets get hit hard or implode or whatever people are saying, that tech stocks, long duration stocks would get hit hardest. Do you agree? Are there sectors that you're looking to avoid completely right now?
I avoid tech not because of valuations, but rather because in my declining years, I tend to invest in industries that I can understand. And for the most part, the technologically based businesses are businesses where I don't believe that I have a durable competitive advantage over other investors. When I look at the margins that are generated by the mature technology businesses, I'm attracted to them. I'm just not smart enough to know whether those advantages are durable. So I stay out of the tech sector, not because of its sector advantages or disadvantages, but rather my own disadvantage compared to other speculators who might be more competent in understanding technology than I. I have a rule in place now, Daniela. I won't invest in an industry that I can't understand, and certainly won't invest in an industry where I can't either spell it or pronounce it.
Amen to that. Amen to that. I completely agree with that, Rick. Let's talk about miners, which is something we both right. know and feel very comfortable with and love talking about. Silver miner ETFs just had their worst quarterly outflows ever. Let's talk about deep value opportunities here and seeing the glass half full or empty.
As you've known me for a long time, Daniela. I'm smiling. The truth is, I have enough money now that Bonnie and I can get through life without breaking a sweat. But that notwithstanding, for some odd reason, I want more. And I believe that the wind is really, truly firmly in precious metal sales, meaning that I would like to own not merely more, but lots more. And the idea that a sector that I'd like to own lots more of is going down in price, to me, is absolutely wonderful. Imagine yourself, Daniela, in suburban New York City, and winter's coming, so you decide that you want to get yourself a nice coat. Your old coat's from Montreal, and it's outlived its purposes. And you go into a shopping mall, and you're expecting to pay $300 for a coat, and you see that coat marked down to $160 from $300. You want the coat. Are you happy or are you sad? The idea that people don't buy mining stocks the way they buy coats is absolutely mystifying to me and absolutely delightful.
And physical metal to that point as well, right? It's all about
absolutely
perspective.
Absolutely. If you have the courage of your convictions, which I understand that many speculators don't, the idea that your perceptions differ from the markets is a gift from God.
So would you not be touching real estate now?
I'm very nervous about the fact that real estate prices are propelled by artificially low interest rates. When I bought real estate precisely because of the delta we talked about earlier in this interview. My cost of capital stayed the same while I could increase my rents. And the delta between my return on capital employed and my cost of capital rose. It didn't occur to me in 1990 that the cap rate, the discount rate would change. In other words, I got this huge benefit for free, which will tell you how little I knew about real estate. I don't see interest rates going sub-zero in a real sense, which means that the discount rate or the cap rate that contributed so much to the performance of my own real estate portfolio is no longer wind in my sails. If you are competent in real estate, if you can buy a piece of property and you have the skill set relative to your competitors to upgrade it, in other words, if you are competent in the business, real estate is one of the great businesses known to man. I'm just not particularly competitive in it. The only sector where I am increasing my personal exposure to real estate is very high quality farmland in the upper Midwest of the United States. I believe that water has been an undervalued component of farmland investing for 50 years. And I believe that that neglect is coming to a halt. So to the extent that I can buy very high quality farmland in the US upper Midwest, I'm doing that fairly aggressively.
And how does one go about doing that, Rick? Because I have a lot of experts coming on saying I'm buying farmland, but how does that really work? I mean, are you looking at the farm? Are you going there? How does one buy farmland?
That's a very long discussion, Daniela. I can tell you that at age 68, the idea that I am going to be driving a tractor or, heaven forbid, stretching a fence is over. I'm not even going to negotiate leases between myself and a tenant. I buy farmland with very, very high quality farm managers, a couple of whom I've known now for a decade. I don't any longer want to be involved in operating farmland. There's an interesting dynamic where the farmers my age, well, some of them are dying, the rest of them are retiring. And it's a very capital intensive business. And often, their children want to become Daniela Cambonis. They don't want to be stretching fences anymore. So what's happening is that there's an emergence of a class of super farmers, family farms that operate 4,000 or 5,000 acres. They may own 600 of them and lease the rest. And so agricultural real estate has become an asset class like other real estate. We buy very high quality farmland in the upper Midwest and we lease it on a net lease basis, the same as we might a warehouse, to a family of super farmers, somebody who farms 5,000 or 6,000 acres. Great for them, great for us.
Okay, I appreciate those insights. Rick, any final thoughts for investors watching as the tale of the Fed unfolds, all the drama in Congress? There's so much happening these days. How does an investor stay focused?
I think the investor must first focus, particularly your younger investors, on their own education. If you rely particularly on the popular media, I think you're setting yourself up for real failure. Understand that their job is to sell you bread or sell you soap or sell you mutual funds. And the consequence of that is that any theme they talk about has to be so broadly acceptable and popular that its time has passed. You need to educate yourself so that your perceptions are formed by yourself with your own family in mind, not by the greater fools. Buffett famously says that the market in the near term is a voting machine. In the long term, it's a weighing machine. If you are happy with the way Americans vote, perhaps you're happy with the outcome that you can expect by playing the latest fad promoted by Wall Street. I'm not. I believe myself, as we've said earlier, that the wind is in the sails of precious metals in particular, which attracts me because I know something about them and I'd like to buy more of them. As we discussed, you and I, 9 months ago, the energy sector, despite the fact that maybe Biden doesn't like it and Merkel didn't like it, the big thinkers don't like it, everybody else does. Everybody else wants to drive cars and stay warm. And so the oil and gas business, contrary to other people's demise, didn't go away. And it still looks very, very, very attractively priced. The final thing I'll say, Daniela, and I've noticed a lot of people making this mistake, it is true that your cash savings are costing you money. It is true that when you put money in the bank and you make 50 basis points, in a world where the purchasing power of those savings are costing you 550 basis points, you have to hold cash anyway. Because a circumstance, and I'm not saying it's going to happen, a circumstance where you have a dramatic reckoning, something like 2008 or 1987 or 1990, liquidity squeezes, when they occur in the market, take down the price of everything temporarily, the good, the bad, and the ugly. Having the cash gives you the tools and the courage to take advantage of that circumstance rather than being taken advantage of. I look at the depreciation of the purchasing power of my savings as being an options premium, to have the liquidity to take advantage of illiquid times in the market.